Good morning. My name is Drew Moore, and today we're going to hash out the USDA stocks and planning intentions report. I've got Michael Reginelli and Brian Basting in the studio here with us. A fairly eventful day so far, post-release here with the May corn up 7 cents, December corn sharply unchanged right now. May soybeans are up 28 cents, and November soybeans are up 13 cents, with wheat in May and July both down about 3 cents in the Chicago wheat contract. So, guys, let's get into it today. Michael, first question for you. A lot of numbers to digest, but what was the big takeaway on the stock side?
Yeah, on the stock side, we were basically, it felt like the market was building kind of all morning to a bullish report. Weren't sure if that was going to be acres, weren't sure if that was going to be stocks necessarily, but it did feel like there was some fodder there.
Sure.
Some of it might have been position squaring too. You know, this report hits on month end, on quarter end for a lot of the institutional and position traders. So there could have been some of that activity kind of leading to the support. But I think the stocks number certainly appears somewhat friendly on old crop, more so beans than corn. But, you know, corn came in at 7.4 billion bushels. That was slightly below the average trade guess, above the bottom, you know, of 7.24. But we're on beans, it was pretty tight, 1.685 billion. Trade was looking for an average of 1.74. So certainly towards the low end of the range. I think the lowest estimate out there was 1.6 even. Either way you dice it up, it's less bushels on hand that are going to be available for corn and beans. And so obviously we can kind of get into the implications of that. But that's what's certainly supporting the front end of the market.
Right. Makes sense. Makes sense. Thank you. Brian, what about planning intentions? What did the USDA tell us in that regard?
There's always surprises, Drew. What's interesting about the plannings report this year, it's almost the exact opposite of last year. Last year, the trade was surprised with a much higher than expected bean number and a lower than expected corn number.
Right.
Here in 23, much lower than expected bean number, 87.5 million acres. And the corn number wasn't a lot above expectations at 92 million, but still a million acres above expectations. So we learned that at the moment, we're looking for a recovery in the acreage up in North Dakota from a year ago, for example, 800,000 acres up from 2022.
Sure.
That remains to be seen, of course. But beans, I think we're just going to have to see how that shakes out down the road now with, as Michael said, with a friendly stocks report, now a supportive acreage report. Maybe those double crop bean acres could nudge up. But bottom line for the moment, we have to take these USDA numbers at face value. Drew, do we agree with them? I think they could change down the road. For the moment, we agree with them. It's really going to be weather dependent.
Sure. Well, we're already starting to hear some private estimates talk about lower acreage numbers in corn. If you look at the upper Midwest, obviously you've got feet of snow coming to parts of the Dakotas. So that concern is certainly seems to be there at the current moment, and looking at the forward curve with the forecast. But what about turning our attention down to Brazil? What's the safrinha crop looking like as that becomes a larger and more important crop to the global S&D picture?
Yeah, you summarized that well. This is the weather market in the 1st of April, Drew. There's no other way around it.
Sure.
What will happen during corn pollination the next 60 days in Brazil? For the moment, they got good subsoil moisture in Mato Grosso, the largest producing state, but they are drying out at the moment. What's going to be critical is, as we get into mid-April, will we get the rainfall forecasted? Several forecasts are saying by mid-April, Mato Grosso will get an improvement in rain. Okay. That'll be critical because toward the end of April, a lot of that corn in Mato Grosso will pollinate. So, and the dry season also begins here in late April into May.
Right.
So when Brazil goes into that dry season, it gets harder to get rain. For the moment, however, I'd remind the viewers that the subsoil moisture in Brazil is very good, particularly in the north, in those big states. Right. In the north, subsoil is very good. Some of the crop in the safrinha crop was planted outside the ideal window further south. So that's something to keep an eye on. But most of the crop in Mato Grosso was planted on time. For the moment, I'd say most of that crop in Brazil still has full potential. Sure. But it's a weather market, Drew, for the next 60 days, and Brazil is front and center in terms of pollination.
Absolutely. Thank you, Brian. Michael, you did a good job digesting the stocks numbers earlier. What implications does that have to the second half of the marketing year? And obviously, bull spreads look pretty good in corn and soybeans here at the current juncture.
Yeah. That's going to be certainly a point of focus. I mean, the market's pricing it in pretty quickly here. There's going to be a lot that we learn, like Brian said, with the stocks number being tighter, it becomes a question of, Was the crop overstated maybe in January? We're not going to know that until September. So we can argue that all day, or is it just higher pacing or cadence of demand? There's a lot that we're going to chew through.
Right.
As far as what we actually do with these numbers and how the market's going to react, we have obviously less product on hand to use.
Right.
In general, that would be somewhat supportive to basis, supportive to spreads. And the fact is, we've been struggling to adequately cover in demand as it is. There's a reason that we've been battling inverted markets all year here. So the idea that we're going to turn the screws and tighten up the stock situation only amplifies that. So we're above delivery value on the IWDS currently. We've been there specifically on corn for quite a while.
Right.
The market does feel set up to drive. It needs to drive movement sooner rather than later. That's the job of the market. It's if spreads are inverting and basis is up and futures are supported, those are kind of the three legs of a bull market.
Right.
The market's saying, hey, we want movement now, whether that's off the farm, whether it's hedged inventory in an elevator. How do we actually get bushels, corn and beans, into the pipeline sooner rather than later? So as the stock situation tightens up, that's what we're going to be watching. It feels like it'll continue to support firmer spread structures until we actually adequately see that movement cover in demand.
Okay, perfect. That makes sense. Thank you for that. Brian, last question for you. We've all digested a lot of data here in the last 15, 20 minutes. You look at the soybean corn spread for next year, new crop. What is that telling us right now here as right before we come into planning? And also, what should farmers across the U.S. be looking at and doing right now?
I'll address the second part of your question first, Drew, and that is what producers should be doing now, as the 1st of April is just around the corner. Defend your balance sheet. There's no other way to say it other than this point, we're looking at some attractive prices still for new crop. Not as high as they were a few weeks ago, obviously, but still very attractive historically.
Sure.
And we're also looking at getting control of any remaining old crop bushels. I'll just tack that in there in terms of, particularly of corn, any old crop bushels. Michael just did a terrific job of saying the market wants those old crop bushels. Let's get control of them. We can always buy a call option to give ourselves upside opportunity.
Sure.
Back to your question, I think the market is saying we're going to need more bean acres. And up until the first half of March, the market was trying to get more bean acres. The no bean Dees corn spread, Drew, was about 2.4.
Right.
But producers did not respond to that. And it actually backed back down to about 2.3. As we speak, I think it's about 2.35.
Okay.
So it's coming back, but I think the market now will incentivize two things. Try and get more bean acres here in the U.S. and try and get more double crop bean acres specifically here in the U.S. because we do have a volume of soft wheat a year ago, compared to a year ago, way up, 20 to 25% in some of those states in the East. And I think those are states, prime states, Drew, for double crop bean acres. So very dynamic market, but defend, defend, defend.
Always, always. Thank you. Appreciate that, Brian. Well, thank you for being here with us today. If you have any questions, please reach out to your trusted ATI advisor, and we hope you have a good and safe Friday.